NVIDIA stock gets new price targets. Most important stock in the world, NVDA stock. Before we go to new price targets, let's go over 6 highlights of NVIDIA report. 1. Record quarterly revenue of $30 billion, up 15% from Q1 and up 122% from a year ago. 2. Record quarterly data center revenue of $26.3 billion, up 16% from Q1 and up 154% from a year ago. 3. Second quarter gaming revenue was $2.9 billion, up 9% from the previous quarter and up 16% from a year ago. 4. For data center, the second quarter revenue was a record of $26.3 billion, up 16% from the previous quarter and up 154% from a year ago. 5. For professional visualization, the second quarter revenue was $454 million, up 6% from the previous quarter and up 20% from a year ago. 6. For automotive and robotics, the second quarter automotive revenue was $346 million, up 5% from the previous quarter and up 37% from a year ago. Now let's dive in. NVIDIA stock, new price targets. So, where will NVIDIA stock be in 5 years? NVIDIA has been a standout performer since 2023, driven by strong demand for its enterprise AI solutions. Following the company's report of triple-digit sales and earnings growth in the first quarter of fiscal 2025, investors are keen to gauge how far NVIDIA stock could climb over the next 5 years. The AI chip market is projected to reach $311 billion by 2029, with a compound annual growth rate of 20.4% from 2024, according to the website, Markets and Markets. If NVIDIA's data center sales maintain their current annual run rate of around $90 billion, this growth rate would push AI-related sales to over $225 billion by 2029. This potential surge in sales could support another doubling of NVIDIA's stock price by 2029, assuming profit margins remain stable. Now let's take a look at 5 highlights of NVIDIA's outlook for the third quarter of 2025. 1. Revenue is expected to be $32.5 billion, plus or minus 2%. 2. GAAP and non-GAAP gross margins are expected to be 74.4% and 75.0%, respectively, plus or minus 50 basis points. For the full year, gross margins are expected to be in the mid-70% range. 3. GAAP and non-GAAP operating expenses are expected to be approximately $4.3 billion and $3 billion, respectively. Full-year operating expenses are expected to grow in the mid to upper 40% range. 4. GAAP and non-GAAP other income and expenses are expected to be an income of approximately $350 million, excluding gains and losses from non-affiliated investments and publicly held equity securities. 5. GAAP and non-GAAP tax rates are expected to be 17%, plus or minus 1%, excluding any discrete items. But, what analysts are saying? Expectations for NVIDIA remain high despite recent challenges. JP Morgan analyst Harlan Sur noted that the 2-month delay in Blackwell GPU shipments is unlikely to impact NVIDIA's overall revenue outlook, as strong performance from the Hopper line compensates for the delay. We expect gross margins to improve throughout next year, with NVIDIA maintaining a strong lead over competitors thanks to its aggressive product launch schedule, said Sur, who raised his price target for NVIDIA by $40 to $155 per share. Cantor Fitzgerald analyst CJ Muse, who reaffirmed his $175 price target and overweight rating on NVIDIA, dismissed concerns over the Blackwell delay as insignificant, especially considering it precedes what he described as one of the toughest product cycles in NVIDIA's history. We see no change in the AI narrative supporting NVIDIA and believe today's potential pullback is simply another buying opportunity, Muse added. Piper Sandler analyst Harsh Kumar shared a similar outlook, upholding his $140 price target and overweight rating following the recent earnings report. Likewise, Bernstein analyst Stacy Rasgon raised his NVIDIA price target to $150 per share, highlighting the company's strong data center growth and the expected boost from Blackwell revenue in Q4 as evidence of NVIDIA's ability to exceed high expectations. Here are 5 growth drivers for NVIDIA going forward. 1. Blackwell platform launch. The Blackwell GPU architecture features several innovations designed to reduce the energy consumption involved in developing, training, and deploying large language models. According to NVIDIA, the platform can cut costs and energy usage by up to 25 times. Despite a delayed launch due to a design flaw, Meta Platforms, Alphabet, and Microsoft are reportedly set to place Blackwell orders worth tens of billions of dollars. 2. Government demand for AI hardware. Government demand. Forbes senior contributor Peter Cohan suggests that governments will ramp up investments in high-performance GPUs to build their own large language models, tailored to their specific languages and data. 3. Data center demand for AI and 5G. NVIDIA's hardware enables data centers to optimize utilization by supporting generative AI and 5G applications. As computing demand rises, maximizing efficiency and utilization will remain a top priority in data centers. 4. Competitive AI chip landscape. NVIDIA currently leads the AI chip market, but competition is expected to intensify over the next 5 years. The closest rivals today are AMD and Intel. Cloud providers like Microsoft, Alphabet, and Amazon, who are also NVIDIA's customers, pose another threat as they develop their own AI chip solutions. While their chip production efforts are still in the early stages and small compared to NVIDIA, they could eventually reduce their reliance on NVIDIA's products. 5. Regulatory and geopolitical factors. US sanctions on high-performance chip sales to China, initially imposed in 2022 and updated in 2023, have already impacted NVIDIA. In response, NVIDIA developed lower performance, compliant chips, but demand for these in China has been sluggish. Chinese sales accounted for 17% of NVIDIA's fiscal 2024 revenue. According to Chinese research firm CCID Consulting, China is projected to represent 30% of the global AI market by 2035, as reported by Reuters. Here are 3 risks to monitor for NVIDIA. 1. Market volatility. The technology sector is inherently volatile, with stock prices often swinging due to factors unrelated to a company's core business. This risk is amplified in the AI space, where potential issues like hallucinations could generate negative headlines. 2. Competition. A $100 billion market opportunity inevitably attracts fierce competition. While NVIDIA's substantial lead in R&D has shielded it from intense competition thus far, this advantage may not last indefinitely. To maintain its dominance in AI chips, NVIDIA will need to outpace its rivals in innovation and cost effectiveness. 3. Innovation uncertainty. Developing new products requires strategic foresight and careful resource allocation, but there's always the risk of investing in initiatives that fail to meet expectations. Bottom line. Given these factors, it's not unreasonable to expect NVIDIA's market cap to double to $6 trillion in the next 5 years, a conservative estimate compared to others. Beth Kindig of the IO Fund, for instance, anticipates NVIDIA reaching a $10 trillion market cap by 2030. Currently, NVIDIA seems poised to continue creating value, backed by its dominance in a leading industry, an impressive customer base, substantial cash reserves, keen strategic insight, and a proven track record of innovation. These strengths position the company well for long-term growth. However, while NVIDIA's value could double or even triple in the coming years, it won't be without challenges. The assumption that NVIDIA won't lose market share in AI may be optimistic, although it's crucial not to overlook the rest of the company's business. Some analysts predict that the AI boom could taper off, potentially dragging NVIDIA's stock down to $100. While demand for AI chips might cool slightly, the AI revolution ensures that overall demand will remain high. Key considerations include competition, regulatory sanctions, and unexpected hurdles NVIDIA might face. Despite these risks, NVIDIA remains ahead of many competitors and continues to launch groundbreaking projects, such as the following. Generative AI models and NIM microservices. NVIDIA introduced generative AI models and NIM microservices for OpenUSD, enhancing workflows and accelerating the development of industrial digital twins and robotics. Autonomous factories in Taiwan. Major Taiwanese electronics manufacturers are using NVIDIA's reference workflow combining Metropolis Vision AI, Omniverse simulation, and Isaac AI robot development to create more autonomous factories. Isaac Robotics platform adoption. Leading companies in robotics, such as BYD Electronics, Siemens, and Teradyne Robotics, are adopting NVIDIA's Isaac Robotics platform for research, development, and production. At gaming, NVIDIA surpassed 2,000 games on GeForce Now, expanded the service into Japan and announced launches of Black Myth, Wukong, and Star Wars Outlaws. NVIDIA announced Omniverse Cloud Sensor RTX microservices to enable physically accurate sensor simulation, expediting the development of autonomous machines. Additionally, NVIDIA won the Autonomous Grand Challenge at the Computer Vision and Pattern Recognition Conference for its advances in building physical, generative AI applications for autonomous vehicle development. These initiatives underscore NVIDIA's leadership in AI and its capacity to drive innovation, despite the competitive and regulatory landscape. NVIDIA, and AI to the moon, just because we like it. Thanks for watching, good luck and good profit. Please read the disclaimer in the description below. You can support the channel by subscribing and turning on notifications. Let's grow the channel together.